Gary, I'm trying to figure out what you mean by your trigs are different. Different where? On NASDAQ? Different than mine? Good morning, Mike. Good morning, Gary. Good morning, everybody. Last time I looked at your NASDAQ, you were running a 21 chart, not a 34. Is that part of the issue, perhaps? Show me a picture. Let's take a look at it. That's 853. So Gary, show me a NASDAQ picture from about 831. You can't even see, we're comparing apples to oranges right now. That trade I posted didn't happen 2 seconds before the trade. That was from right after news. So your triggers at 856 are going to look very different than mine at 831. That's probably what you're looking at there. Cool, cool. Good morning, everybody. Nice to see you guys here. Slow and steady. Good to have you back. K-Pop, Samuel. I like it. Who else is new with us here today? I'm looking through. We got the usual suspects, too. Edwin, Jerry, Ron, Sophia, Gary, Bruce. Man, all the cool kids hanging out. Dano, nice to see you back in here. Derek, good to have you back. Hey, Jay, nice to see you too. Guys, I'm excited about today. Today's going to be a good day. I'm finally out of a hotel. have a proper desk and chair and office. Yes, good morning, Derek. Guys, my name's Mark Novak. For those of you that don't know me, I am the younger, better-looking brother of the Novak pair. My brother is the genius that writes the software. I'm the guy that's going to teach you how to read it. The cool people know who you are. Guys, and we're going to do that a lot today. We're going to read charts. We're going to read indicators. And we're going to keep it simple. And that's going to be the coolest thing, is it's not going to be this difficult, arduous process that people think it is. We're going to embrace simplicity. We're not going to overthink things. We're not going to add charts that don't need to be there. We're not going to create rules in our heads that aren't necessary for success. And I really want you to embrace this. And you guys that have been doing this a long time, you know who I'm talking to. I want you to try and forget some of the stuff that you know. You know what? You came to us for a reason. So let's ditch some of those older concepts that weren't working for you, and let's embrace some newer, simple concepts. This class is your class. It's not designed as a lecture. The first hour tends to be. The first hour we're going to talk a lot about just basic rules and advantages. But the second hour, the third hour, and guys, I can't stress this enough, it is open 100%. If there's something that you want to talk about, talk to me. If there's looks that you want to study, if there's patterns that you're curious about, this really is your classroom, and I want you to focus on Derek, are John's trading rules? Man, they might be. Derek, can I give you my 2 cents on it? Those are labeled John Novak's trading rules for a reason. Because John Novak wrote the software. John Novak has been reading the software for 20 plus years. He's been following the markets for 20 plus years. Anytime you look at John Novak's plan, what you're going to find is that it's suited to John Novak. If you want that same checklist, here it is. This is the beginner's checklist version, right? This is the keep it simple checklist. Good morning, Tam. Derek, that's the one that's going to keep you focused on the best of the best and doesn't have you doing things like ignoring this, if that, if these, then those. It's very straightforward. And then here's a simplified version of the plan as well. But, and guys, I can't stress this enough, I can't tell you what to do. That's certainly not my job. But if I go to the rules page from Discord, let me see if I can get up there right now. Trading rules. And we're going to look for That's a picture. That's a picture. Let's see if we can find his plan in here. I thought that it was. That's a lot of things on that. Just double checking. I want to see if I can find his plan on here. I'm not sure that I can. No, that's a 50-50 YouTube video. That's a YouTube video. Derek, I will try to find it for you. I'll reach out to John and see if he'll share it one more time. Um, but I'm kind of the opinion, and this is just me, and I can be opinionated from time to time. Do it easy first, right? Keep it simple first. And guys, that's what we're going to focus on. And Derek, I'm not saying that you're guilty of this here, but I can tell you that you're going to see other traders taking trades, and you're going to be like, I want to do what they do. I want to do what those traders are doing. And guys, the reality is really all of the successful traders that you see in this room, that you see in the trading room, and really all the successful traders that I've ever met have an individual plan. They have a plan that suits their needs. They have a plan that wraps around the way their brain works. My brother and I read charts almost exactly the same, but my brother and I have very different pain tolerances, so we trade differently. He'll take trades that I won't take, that I won't take. He'll manage out of trades that I wouldn't even enter, and it's not because they're bad trades. It's because my personality doesn't fit his personality. We're two very different types of people. And you're going to have to get what suits you. And I can tell you, as a brand new user, if you try to trade like somebody that's been trading for 20 years, it's going to be a little bit different, right? Because if you just look at these, ignore divergence by comparing the small and the large, the range triggers, there's all these different options that are available through his plan that new users aren't really ready for. So I'll ask him for it. I'll see if I can get a copy of that. I know that I can find it somewhere. But let's keep it simple first, right? And then you'll work into it. Guarantee it. But guys, before we do anything, and I'm going to do this right now, we're going to forexfactory.com/calendar, and we're going to look for news. And we're just going to see what's going on, because we want to make sure that the market's not going to move or move erratically. If you were watching at 8:30, you saw all that big news hit, all that red high impact news hit. And NASDAQ spiked, and the S&P spiked, and I think even crude oil might have spiked a little bit, and it moved fast, and it moved fast enough that it was difficult to trade, right? And you had to let it slow down a minute, and you had to let it kind of get back into normal mode, into readable mode. It was too fast to read, and that's what this news does, guys. When you see this high impact news, it can just make the market erratic, and it may take a minute for it to sort out, and it may take 5 minutes for it to sort out, but knowing that it's there gives you the advantage of not jumping into that freight train. And then everything that I talk about comes from the education page. Everything that I talk about is available to you in the tutorial section. The rules that I discuss, what they look like, what they mean, the advantages, how to stay focused, all of that's in here. And guys, we're going to keep the focus very streamlined in the beginning. And for the first hour, the first hour, it's dedicated to you new guys. It really is. The first hour is for you guys learning to read your software. We're going to focus on what's called a high probability trend trade. And this high probability trend trade is a trade that typically wins 70 to 80% of the time. This is a trade where every indicator on every chart agrees for the trade. You're going to have strength. You're going to have a clear path. You're going to have nothing between you and your targets. And this is the trade that is going to do the miraculous job of teaching you to read your indicators. It's going to turn you into a chart reader, not a day trader, right? Being a chart reader is the process that gets you to being a day trader. You can't be a day trader and then learn to read your charts typically. because chart reading is going to be what you do for 90% of the day. You're going to open up your charts. You're going to look at your workspaces, and you're going to begin to take the information, and you're going to become a chart reader, and you're going to be able to understand, and you're going to be able to understand fluently where the market is likely to continue. And you're going to take that point and you're going to use it for entries for that highest probability trend trade. You're going to understand where the market is likely to go, and this is going to be how you're going to make decisions on profit targets. And then finally, you're going to understand where the market is likely to stop. And these likely to stop areas, these are what we call termination conditions. These are areas where the trend might end. These are areas where price may react to Fibonacci, creating a bounce that's too large to trade, to pull you out of a trade. But it's going to be your chart reading that takes you to that next level, guys. And that chart reading is going to set the tone for everything. So if you spend your first 30 days focused on this high probability trend trade, and especially these high probability trend trades that happen after one of those likely to stop areas on the large chart, it's going to just really, it's going to give you a plan that's capable of winning as a brand new user. It's going to give you a plan that keeps you focused, that keeps you looking for the absolute best of the best and not searching for everything. And when we talk about that high probability trend trade, it's 3 rules. Remember, I said simplicity, right? I'm going to keep this as basic as I know how to keep it. These 3 rules for a high probability trend trade are going to provide you 3 advantages. These 3 advantages are laid out in yellow here, and really they're the recipe for a trade. In order to enter the market, in order to have a trade, right, to go from being chart reader to trader, I need the advantages of momentum, of a clear path, and an entry area. And each of these 3 rules is designed to provide that momentum, that clear path, and this entry area. And they're going to happen on only 2 charts. And this is where new users, you're going to see people with other time frames. You're going to see people with other range charts and all these different bells and whistles that you think you need to be successful, but you really don't. And what you're going to find is that as a new user, sometimes more information isn't always the best idea. Sometimes for new users, it's better to keep it simple, right? To keep it focused and not give yourself too much to think about. So we're going to use a large chart. Your large chart is a broad stroke of a brush. Your large chart is, we're going to use 1 bar on this large chart. And from this 1 bar, we're going to let this chart define direction, momentum, and areas. And this is a broad stroke of a brush. This is painting the side of a barn with a Wagner power sprayer before you get into the corners, before you get down to the details. And this is going to show you the overall opinion of the market. This is going to be going with the general consensus, what the guys with deep pockets are thinking, what the ladies that work for institutional, those institutional traders are doing with the money. This is the overall opinion of the market, and it's something that we never have to fight. Rule number 1 and rule number 2, the advantages of momentum and a clear path, are going to come to fruition on this large chart. This is going to be the one that tells you it's time to look for a trade. And when it does, that's where you'll focus your attention on your small chart. Your small chart is going to refine that broad stroke of a brush. What happens in that 1 bar on a larger chart will happen in 15 to 30 bars on a smaller chart. And it's that refinement process. It's that identifying where the market is likely to continue on a smaller, faster chart that's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. So I'm going to plead with you on bended knee. Keep it simple initially. Focus on 3 rules. Let it happen on 2 charts. And let it be simple, guys. And what we're going to do is we're going to go back to the tutorial section, and I'm just going to use straight out of here to teach the lesson, guys. And everything starts with your T3 trigger lines. In your T3 trigger lines, the first thing they do is they're going to define trend. There's 2 parts to the trigger line. The solid lines, the smaller of the 2, these are your fast trigger lines. We call them the small triggers. Your slower moving trigger lines are what we call the large triggers, and these are dashed so you can differentiate between the 2. When your small triggers break above the large triggers, it's going to paint your background green, and that green background is going to let you know that you're in an uptrend. And when you're in an uptrend, One of the best advantages you can provide yourself is to only look for rules to be met for high probability trend trades long. When those small trigger lines break below the large trigger lines, it's going to paint that background red. And again, give yourself the advantage of trading with the trend, understanding that with that red background, only looking for rules to be met for high probability trend trade short. And guys, this is really the first advantage. It's not listed in the rules, but trading with the trend is going to keep you on the right side of things more often than not. And then we're going to get into rule number one. And rule number one says that the large chart must have strong trigger lines. Strong trigger lines mean that your small triggers are crossed up. They're above the large triggers, which are also crossed up. Guys, when there is space between the small and the large, when there's that gap between the faster and the slower, this is when the odds are favorable for the market to continue in the direction of the trend. And you're going to hear it in class all day long. Odds favorable momentum. You're going to see it annotated, OFM. And when you have this odds favorable momentum look, that's the most favorable look for buying a pullback to Fibonacci support on that smaller, faster chart. So on your large chart, that one bar, you're going to see these tails. You're going to see these wicks. Understand that the refinement process on the smaller chart, these are those pullbacks that are going to have you looking for that great entry, that spot where the market is likely to continue. And guys, we're going to pinpoint down right to the bottom of where that tail is formed for our entries, and we're going to talk about that in just a little bit. But let's focus on the advantages that we need to get to that entry first. In a downtrend, small triggers below the large triggers are wide, they're angled in the direction of the trend. The odds are favorable for that market to continue in the direction of the trend. Odds favorable momentum, guys, that's your first advantage. And I'm telling you, odds favorable momentum will actually hide a couple mistakes here and there because the market is so likely to push in the direction of the trend. It's a simple look, and it's the space created between the two that provides the advantage. Commit to it, right? First, keep it simple. Give yourself the best of the best before you try to discern other information. Because when those small triggers come back to the large triggers, when they work their way inside of the large trigger lines, we call this a weakening of the large triggers. And when you have that weakening of the large triggers, anything can happen up or down, which takes away the advantage of momentum, which means that you've lost a third of the recipe for a high probability trend trade. You're going to hear this called anything can happen triggers. And anything can happen triggers, you're going to see a lot of times right before a reversal in the market. You're going to see these anything can happen triggers as price approaches Fibonacci. And when these anything can happen triggers precede a reversal, you're going to patiently wait for the momentum to pick up, for that separation to happen. And there's one of those tails with odds favorable momentum, and it pushes that market in the direction of the trend right up until it slows down again to those anything can happen triggers. The market rolls, and there's that odds favorable momentum once again, and look how the market continues down. So if you're brand new with me, and I know that I've got some new people in here, do me a favor. Give me a Y in the room if you're comfortable. This is your best of the best look. When the trigger lines separate, the scissors are open, it's ready to cut, however you need to see it visually. But this is what starts the process of looking for a trade. There's going to be times when both the large and the small disagree, maybe with one another, or maybe with the direction of the trend. As this is a sorting out period, this is where the buyers and the sellers are fighting. This is where the people that are in power really they're duking it out a little bit. We don't have to get caught in that as Nexgen users. We have rule number one in place that has us patient, not predicting, right up until we get that odds favorable momentum again. So that's rule number one. Strong trigger lines on the 13-2. This is literally going to take you, I don't know, if you're brand new today, you're going to be proficient in this by the end of the day. And if I take, this is the S&P. If I take this S&P chart and I put only trigger lines on it, I want you to see just how easy it is to recognize. Smalls are above the large are wide, they're angled in the direction of the trend. And guys, if I take a circle, look at that, there's those tails. There's that potential pullback on a smaller, faster chart. This becomes a great tool for study. Everything says up, the momentum is strong, there's those tails. and off it goes to the races. There's that tail. And guys, this is in the middle of the night. These patterns repeat themselves even when most of us are sleeping with that odds favorable momentum. And then today it's kind of been a grind up a little bit, right? It is. Edwin, it made sense to me in my head because you can't cut if the scissors are closed, right? The larger flat, the smaller up, right? Up versus down, guys. There's no agreement. There's no odds favorable momentum. Even without the benefit of Fibonacci, we know that there's nothing for us to do because we don't have that advantage of momentum. And that's really how easy it is to begin to recognize this first one. And when the first rule is met, we're going to go into the second rule. And yep, the second rule is going to provide an advantage as well. It's going to give us the advantage of a clear path. Guys, every time you take a trade, you have the ability to have absolutely nothing in your way. No places to bounce, no places where that market may reverse. And we do this by making sure that there are no termination conditions present. In a termination condition, again, straight from the manual, Fibonacci tops and bottoms. A termination condition is a Fibonacci-based indicator that may reverse the market. And it's going to come from a comparison of those T3 trigger lines, those same trigger lines that give you momentum, and you're going to compare them up against an area. And the areas that you're going to compare against are red Fibonacci resistance, blue Fibonacci support, these yellow 1-to-1s, and for you new users, this is a great key to what you're looking at when you open up your software. We're also going to learn to respect these divergence highs and divergence lows, guys. And divergence means that there is a loss of momentum in the market. That's all it means. It just means that the market is slowing down. Everything says up, and then we get a pivot. And if that pivot has a loss of momentum, your software calculates all that, and it shows you this magenta line from a high. It shows you this cyan line from a low. You'll be able to use these divergence lines to see if we've reached an area where the market may terminate as well. And you're going to do that with a really simple comparison. The first thing that has to happen is price reaches the area. Those price bars, dynamic Renko bars, come down. They come into contact with or a tick or two off of that area of support. When price reaches the area, all you have to do is ask yourself, where are my trigger lines? And if they remain above that area of support, no more short trades. This is an area that may reverse the market. This is an area that may create a bounce that isn't tradable. Rule number 2 says we need to have a clear path, right? We have to have that advantage of a clear path. A path has been cleared. If price reaches support and the trigger lines remain above, we consider this path to be cleared when both the small and the large trigger lines get to the other side of that area. And you'll notice that support begins to behave as resistance. You'll notice that with that odds favorable momentum and a clear path, there's one of those tails that takes you all the way down to the next Fibonacci area. And guys, you're going to see this all day, every day. But we're going to keep it simple in the beginning. We're going to do nothing more than a simple comparison. If price reaches an area and none of the triggers break through, we're going to sit on our hands. We're going to be patient. We're going to wait for that path to clear, or we're going to wait for the market to reverse. Those are the only two options when price reaches Fibonacci. If both the small and the large break through the area, well, now the area is broken. Now that path is clear. Now rule number 2 has been met. And if rule number 1 has been met as well, guys, there's another one of those tails, one of those potential pullbacks to an area on your smaller, faster chart. So I'm going to ask again, guys, give me a why in the room if you're with me. Termination conditions may stop the market. Termination conditions may reverse the market. They may create a bounce. Everybody give me a why in the room if you're cool with that. Termination conditions, this rule is designed to keep you safe. It's to keep you from going into areas that may create that big old bounce. So I'm going to give you a couple pictures, guys. I do a lot through pictures. I think people work visually a lot. These are termination conditions at a high, and notice that the recipe is the same. Price reaches an area. That's the first thing that happens always. And if the triggers remain below that area up top, well, we know we have a termination condition. Here's one of those divergence lines. Not for the NASDAQ, John. You had a plan. I'll show you a picture of it. Hold on one second. There you go. This is what Derek was looking for. That was from one of your videos, May 15th, 2022. That's what he was curious about. I told him keep it simple, but I told him that I would ask. All right. I don't even know if you still have that one. But there's John's NASDAQ futures trading. Guys, we'll share everything with you. Always. Here's one of those divergence highs, one of those pivots that creates the magenta line. This magenta line doesn't print until price is all the way down here. So it's not a termination condition. It's just a visual representation that we're losing momentum in that push up. It's when price reaches that line and the trigger lines remain below, now we have a termination condition. And if this termination condition creates a full reversal in the market, makes it go the other way, the large triggers roll, the small triggers roll. Guys, a termination that creates a full reversal is what we call a good top or a strong top. And that's the precursor for your highest probability trend trade. Price reaches resistance, all of the trigger lines remain below. We now have a termination condition and the path isn't clear. Price reaches resistance in 1-to-1s. All of the trigger lines remain below. We don't have a clear path. No long trades. Rule number 2 isn't met. And then we have, of course, the same thing happens from lows. Price reaches the area. Notice that I'm saying that over and over again. Price reaches the area. If all of the trigger lines remain above, there's no short trades into that area. You're sitting on your hands. 90% of what you do is just reading your indicators, waiting for those advantages. If that termination condition creates a full reversal, meaning that the large triggers go from red to green, the smalls are on the correct side of the large, now you have the trend, now you have the clear path. See these tails? That's your highest probability trend trade, guys. From a good bottom, from a strong bottom. Price reaches support, absolutely no trigger lines break through. No more short trades, even with odds favorable momentum. Here's one of those divergence low pivots. Not a termination condition, just a slowdown in the market. But when price reaches that divergence low, now we have that pivot stop out. Now we have that termination condition. So guys, these are your keep it simples. It either is or it is not, right? You either have a clear path or you do not. There's a divergence low. The triggers are breaking through. It's not really a termination condition because we've begun to pass through the area. But when price checks that resistance low, or that divergence low, excuse me, all the trigger lines remain above. Now we have that termination condition. We have that pivot stop out of a prior divergence. You'll see it at the top as well. Straight into resistance and no trigger lines break. It pushes all the way back to support and no trigger lines break. 90% of what you do is going to be reading those indicators, waiting for those advantages. Price pulls all the way back up to the 2 forms of resistance as well as that divergence high. None of the trigger lines get through, guys. This is a great indication, that pivot stop out of the divergence high. When it happens at Fibonacci, this adds power to the top. And when this termination condition at the top creates that full reversal, gives you that odds favorable momentum, that's your highest probability scenario for taking a pullback on that smaller chart. One more time, price reaches 1-to-1s, absolutely no trigger lines break through. We know not to go short because of rule number 2, and look at the bounce that it creates, guys. Rule number 2 is going to keep you on the right side of things more often than not. When this termination creates a full reversal, my trigger lines roll from red to green, my smalls get above, and then I get that clear path, both trigger lines above that area of resistance. It begins to act as support. There's one of those circles on the tails, one of those highest probability trend trades. Guys, is everybody comfortable with the concept? Let's go back to the live chart real quick, right? And let's see what happens. Price reaches resistance. Absolutely no trigger lines break through, no long trades. You guys want to see something amazing? I'm going to take this picture right here. We study patterns a lot. From resistance to support, the triggers don't follow and it comes right back up to resistance and that divergence high. I'm going to go to the manual to a picture that was taken probably about 2 years ago. Look familiar? Patterns repeat themselves every day. We're learning these patterns that create advantages right now. That's eerie to me, how much this looks like this right in the moment. So guys, you're going to learn to recognize termination conditions. You're going to learn to respect termination conditions and the advantages that they provide you. These areas likely to stop the market, keep you from taking those trades into areas where the bounce may happen, right? And if you scroll back, look at this, directly to Fibonacci support. Absolutely none of the trigger lines break through. This termination condition created a full reversal. This full reversal created odds favorable momentum. And there's one of those tails, guys. There's one of those opportunities to make money on the way up. This termination condition created a full reversal. This full reversal gave odds favorable momentum. There's one of those tails giving you your highest chance of success. So we're going to keep it simple initially. We're going to focus on the best of the best. We're going to embrace the advantages. We're going to respect the areas. And the cool thing is you're going to be able to take these looks and you're going to be able to turn them into something great. Sometimes the market turns from nowhere. Sometimes the market just does a 180. The path is clear, the triggers are down, the trend is down, and up it goes. Sometimes even with odds favorable momentum and a clear path, that market comes down. On your large chart, it's a slower chart. It's a broad stroke of a brush. You're not going to see change as fast as you will on a small chart. So there's one termination condition that I'm not going to use that large chart for. There's one termination condition that I'm not going to use those areas for. And this is looking over at my small chart and recognizing 3 divergences in the same price range. It may terminate the trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. You're going to see this look from a low or this look from a high, these 3 divergences, these weak triggers. At times, when your large chart is trying to change direction, but it's not moving fast enough to show you that change. These 3 divergences in the same location are also going to help you manage trades. If I'm in a short position and I see 3 divergences, that's my cue to get out of that trade, to exit, to take profits, to get to a 0 loss because that market may reverse. So that's your termination condition section, guys. That is a simple recipe, right? It is nothing more than price reaches the area. What are your triggers doing? So now we have the advantage of momentum through strong triggers. Now we have the advantage of a clear path through no termination conditions. Both of these happened on that larger, slower chart. Now we're going to refine it. We're going to come back to that best of the best area. And that's going to give us the advantage of an entry area. An entry at an area where the market is most likely to continue. So when the first 2 rules are met on your large chart, this should be your look on your small chart. We're in an uptrend. The large chart's in an uptrend. There's nothing in the way. Your small chart has strong triggers. Small's outside of the large. It's the exact same look even though it's on a different time frame. And what you're doing is you're looking at this point for the areas where a trend trade may originate. And the areas that we use are fibs, Fibonacci support or resistance, mid bands, or yellow 1-to-1s, guys. Every high probability trend trade originates in an area. Fibs, mid bands, or yellow 1-to-1s. And those areas need to be inside of favorable large triggers. And a favorable large triggers means that your large triggers, these smooth moving triggers, that slow moving indicator on your smaller chart, must be lined up with, overlapping with your synthetic triggers. It's the same look. It has steps on it though, and that's how you differentiate. But when they're one on top of the other, when they're overlapping, when they're working together, like two snakes become one, this provides your smallest window of opportunity, the smallest area where the market is likely to continue. So we're going to embrace the idea that every trade that we take as a high probability trend trade is going to originate from an area inside of favorable large triggers. In rule number 3, the rule that gives us our entry says that we're going to use a limit order, meaning that you're going to be able to pinpoint with such accuracy, you're going to wait for the market to come to you. And it's a little eerie at first as a brand new user when everything is going up, when the momentum is strong, when there's nothing in the way. You're going to want the market to pull down to you. You actually want a small retracement, counter to the trend, counter to the momentum, counter to the clear path to get you into the market. So we're going to use a limit order to buy or sell a pullback at an area, fibs, midbands, and yellow 1-to-1s, inside of favorable large triggers. And guys, this is what's going to allow us to reduce risk. This is what's going to allow us to maximize our profit potential. So when everything says up, we're going to wait for a reversal bar. We're going to wait for that first red bar after all of those green bars. And this kind of signals the beginning of the pullback. This is your smaller crowd. If the large crowd is reflected in the large chart, the opinions, everything says up, everything is going. We're going to let a couple yahoos that didn't get that lesson in this classroom about fighting trend and fighting momentum, they're going to push us back, guys. They're going to give us that little pushback we need to take our entry. So when this reversal bar prints, we're going to create a window of opportunity. The first thing I do to create a window of opportunity, and I'm going to share this with you because it's been very effective for getting me into the right spot. Let me open it up. I took a picture. And this one's straight out of the manual. The reversal bar prints, and I'm going to draw a box around my large triggers. It's going to be a mental box if you don't want to take the time with the drawing tool. As you study, I would encourage you to use that drawing tool. So from the top of my triggers to the bottom of my triggers, this is the area where I'm looking for areas, right? This is the range for which I'm looking for areas. But my rules say that I need support inside of those favorable large triggers, which means that I need a midband, or I need fibs, or I need these yellow 1-to-1s. So my window of opportunity for a long trade becomes my highest point of support inside of favorable large triggers to my lowest point of support inside of favorable large triggers. And the shaded area represents the actual window of opportunity, that area where the market is most likely to continue. Sometimes you'll have multiple lines. Other times, you may just have one line. You may just have a midband. You may just have 1-to-1s. But when you're creating that window of opportunity from the top of the triggers to the bottom of the triggers, for a short trade from the lowest point of resistance to the highest point of resistance, and if there's only one line, that's the smallest possible, most concise window of opportunity that you're ever going to get. We're not paying attention to Fibonacci resistance or 1-to-1s outside of those large triggers. They don't fall within the window. So when we talk window of opportunity, from that highest point of support, and this is where, on that pullback, we're going to have a limit order waiting just above that midband, right at the top of the window because of the momentum, because of the clear path. Guys, give me a Y in the room if you're with me on that. When the advantages are present, we're going to create a window, and at the top of the window is where that limit order is going to wait for the market to come back, right? Because with all that momentum, we don't know if it's going to make it to the bottom. But because it is a window, every time we take this trade, we're going to expect that it has the potential to make it to the bottom of that window, right? It may go bounce off of those 1-to-1s. It may bounce off of this midband. We're good, but we're not down to the tick good, right? So we create this window, we create this area where it's most likely to continue, and then we're going to put a stop right outside of that window. We're going to put a protective stop beyond the window of opportunity where the market should not go. Because if the market is likely to retrace to this area, well, we don't want to stop inside of that area. We want it beyond. So if the market moves beyond this area, we're going to exit the trade. We will take a loser. And guys, I'm going to remind you right now, because this is hard for new users to grasp. Whoops. Anything that wins 70 to 80% of the time, guys, anything that is successful more than it isn't still has to lose 20 to 30% of the time. It's a cost of doing business. It's the market's ability to be wrong every now and then, right? So every now and then, that stop's going to get hit. And that's okay, because the advantages were in place. The idea is that every time you take a trade, you have a statistical advantage. Every time you have momentum and a clear path, every time you have an area inside of favorable large triggers, you're going to be committed to that trade because it typically wins 70 to 80% of the time, because it provides the advantages you need to have a successful trading plan. And this is a trade that I'll never miss. Because 70 to 80% of the time, this is my result. Profit target reached. Notice that it went beyond the top of the window, about to the middle of the window. No problem, my stop was down here. Once it moves in the direction of the trend with the momentum, with the clear path, I can reduce my risk to just below that reversal bar. So now I've got even less risk on the trade. I can use Fibonacci and momentum for profit targets. And guys, this is your highest probability trend trade. This is the trade that's going to set the tone for you. This is the trade that's going to teach you how to read your charts. This is the trade that's going to build confidence through the memory of success. This is the trade that for your first 30 days with Nexgen, focus on nailing the entries. Focus on recognizing the best of the best look. Focus on getting in when everything says up and when the path is clear. And when you study, when you put it on two charts, I want you to see it when I bring it together, guys. And this is in the middle of the night, and it's still true. We had a termination condition that created a full reversal. That full reversal gave me odds favorable momentum, and that odds favorable momentum ultimately gives me that clear path. Here's a pullback directly to support right at those large triggers, guys. And that market continues on to that key Fibonacci area. This is how you're going to study. You're going to go back, and when the rules are met, you're going to circle the tail. I need you to take a picture of it, right? Let's make sure that you're seeing what you're seeing. Every time you take a picture, write rules. Did we have odds favorable momentum? We sure did. No terms. Price didn't reach that area, did it? We're good here. And then notice that the circle that I created lined up right with an area. Use the language, area inside of favorable large triggers. And you're going to use this tool, guys, two ways. You're going to be able to copy it, and you're going to be able to drop it in the room. And you're going to be able to say, hey, Mark, this was my entry, right? This was my exit up here at Fibonacci resistance. These are my rules that I'm following. Whoops, that was the wrong thing. How did I do? Let's have a conversation about it, Mark. Let's talk about what I did, what I see, how I executed, where I got in, where I got out, and help me out here. Do I need to do it better? Am I looking at things the way I need to look at them? And guys, you can repeat this process over and over, building trust with the software. Pull back to support inside of favorable large triggers. Pull back to support right there inside of those large triggers. Over and over, you're going to see this pattern repeat itself. You're going to see it happen where the smalls are above the large, where the large are wide, angled in the direction of the trend, and you may drop a limit order just above that highest point of support right there inside of favorable large triggers. And this is going to be your look, right? The triggers are strong, they're overlapping, they're one on top of the other. And there's my area from the mid-band to Fibonacci support, guys. From the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support. This is my window of opportunity. I'm not in control of whether or not it gets there. I'm not in control of whether it wins or loses, but I have a statistical advantage. When I have a termination that creates a full reversal, the full reversal provides me odds favorable momentum. There's my reversal bar, and it doesn't make it, not my trade. It pulls back up and dances, and I keep my limit order where it belongs, right at that area. I don't get that fear of missing out, because if I get in somewhere up here because I'm afraid it's going without me, my risk is still all the way down here, guys. I've increased my risk. I haven't guaranteed a winner. Does that make sense, guys? This is your setup live in the moment. Reversal bar prints, window of opportunity is created. Guys, let's look for an opportunity to make money to the upside. Let's look for that highest probability trend trade. And let's focus on the execution. And that's the one. And we'll leave that up and we'll see if anything goes with it. This is crude oil. You can use Fibonacci to stay out of a range-bound market. From support to resistance to support to resistance, pivot, stop out at support, straight to resistance. Guys, when that market is channeling, stuck in a groove, your rules aren't met. It keeps you safe. You don't get chewed up. You don't get beat up. And now this termination has given us that odds favorable momentum, and we're starting to clear that trouble area. But we're waiting for our triggers to break. And then, of course, NASDAQ, everybody's psycho stepbrother. What did that circle look like? Right to support, right there at large triggers. And we were a tick or two below that key Fibonacci area. Possible opportunity there. Indecision on the grind up, maybe not the best of the best. And then as you come back, you can continue to circle. Guys, is everybody with me on this circling? This is a great way to study. This is a great way to recognize whether or not you have an opportunity. And here, I want you to see this. The strength is there. It's coming from a termination, but 3 divergences in the same location are going to keep me out of this trade. This indecision between the triggers is going to keep me out of this trade. And the market still went down. And I have to be okay with that because there wasn't a statistical advantage. So guys, this is your study tool, right? This is how you're going to identify your momentum, your clear path, your potential area for entry. What do you think? Rules met? If I enter the market, oh, it didn't let me. There we go. We're way beyond, right? Stop goes where the market shouldn't. Strong triggers, clear path. Should have been in at 28, not 28.75. All the advantages in place, right? Guys, your job in the beginning, enter this trade if the rules are met. Take a picture. Don't worry about the outcome. Focus on your entries because your entries are going to create manageable trades. Does it make sense, guys? You can take this. Watch this. I can put a checklist up against it, and I'm going to give you guys this checklist right now. I'm coming from a strong bottom. Termination creates a full reversal. I have odds favorable on both charts. No terminations, and I had an area inside. Guys, this is my statistical advantage. This is a trade that I'm comfortable taking every time. This is a trade that if I take 100 of them, if I take this trade 100 times, I'm going to lose 20 of them. Probably going to win 80 of them. So I don't get caught up on anything other than focusing on my entry, identifying my window of opportunity, getting into the market where it's most likely to continue. We're going to talk to you guys about a simple plan that takes profits at $100. And it's already hit it like 4 times. And when you take those profits at $100, it goes in the bank, right? It's yours, 100%. Nobody can take that from you. We're going to keep it mechanical. We're going to keep it methodical. We're going to focus on the absolute best of the best. And guys, I'm going to give you some tools to help you do this. I'm going to give you everything that you need. The first thing I'm going to give you is the trend trade checklist. And this trend trade checklist is how you're going to police yourself, making sure that you have the advantages. Print it out, put it on your desktop. Make sure that every time you take a trade, you're following these rules. I've never had anybody follow these rules to the letter and do worse than 70%. So if you're not winning more than half of your trades, guys, refocus. I'm going to give you the exact same checklist with pictures stolen from the resource materials describing each of the conditions that are on the checklist, making sure that visually you can line up what it says. And then finally, I'm going to give you the simple plan. Simple plan for consistency, guys, for brand new users. Simple plan to keep you on the right side of things. Simple plan to give you those advantages. And it starts with, in big, bold letters, never fight the large chart direction. Never fight the large chart triggers. And this is going to help you a lot. And this is going to keep you focused on the best of the best. You know, it's a funny story. I like to share this story about once a month. John Novak had a broker once, and the broker told him, he goes, hey, I can guarantee you $1 million in your account by the end of the year. And of course, John goes, man, that's great. How do we do it? He goes, I need you to fund your account with about $3 million. And I want you to fight that trend every opportunity you get. By the end of the year, you should be down to $1 million. And John laughed and the broker laughed, but it's kind of a funny story that's held true. There's no reason to fight the trend, guys. The trend is established by the people that move the market. Use this checklist to define your entries. Spend 20 days focused on great entries. Don't worry about anything else. I'm going to get in at the right spot. That's my goal every time I take a trade. Keep your management methodical in the beginning. Keep your management at a point to where it doesn't really require you to read your charts. It doesn't require you to form an opinion, to read your charts in the moment. It is mechanical, 100% if-then. Your initial stop will be outside of the window of opportunity, where the market shouldn't go. At this point, you either get stopped out or you get a reversal bar. And if you get a reversal bar, well, then you're going to reduce risk. You're going to come through. Let me open up picture. There we go. And you're going to go a tick or two above that reversal bar. And your profit targets are set, $100, $200. And at this point, you either take a small loss or it goes to your first target. And if it goes to your first target, there's $100 in the bank. They can't take that from you. There's a dopamine kick. It's confidence through the memory of success. And you're break even on the trades. You can't lose. So as a brand new user, this is a big sigh of relief because it means that you can let it run to the second target. And if you let it run to the second target, that mechanical approach, that's a $300 trade on the highest probability trend trade, guys. And I'm pulling these pictures right off of a spreadsheet. And the spreadsheet has pictures of the perfect entry. The spreadsheet has that mechanical management plan pictures. It has all this stuff for you. And this was given to you when you started. Yours has about 65 pictures. Mine has about 265 pictures of rules-based entries. I just put it in the room. Steal it. Study it. What did our high probability trend trade do? Did it? Oh my gosh, look at that. We got our first target. What do you say we go break even and see if we hit that second target? We only have to make it up to 32.75. It's kind of fun when it happens live, isn't it? 32.75, guys. That's our $200 target. You've already put $100 in the bank. You're already break even on the trade. And you don't have to be. You can keep your risk on there if you want. But look how the market pulled right back to support inside of favorable large triggers. Look how with this momentum, it was so easy to capture $100. And with this much momentum, guys, if you were feeling crazy, if you've grown with the software, eventually your second target may go all the way to Fibonacci resistance. And I know that this is the right thing to do because Alan's doing it. And Alan nailed the entry, and Alan took $100. Actually, he took more than $100. Nice profits, right? He's got very little risk on the trade. Everything says up. The momentum says up. He's using Fibonacci for targets. Guys, Alan's doing everything that we teach. But I'm going to put this one at that $200 profit target. Look at this. Momentum leads the way. Clear path leads the way. Perfect entries create manageable trades. Every indicator on every one of my charts says up, guys. This is what you're learning as a brand new user. Dano, slow and steady. Sam, Samuel, Tam, Ron, Jeet. Even you guys that are old, Mike M, Mark, Jim K, Shogun. It can be easy, right? Guys, this is what we're doing. This is what I teach every day. Every day I talk about these advantages. Every day. My only regret about this lesson is that my live account isn't up, that I'm not in this trade, that I haven't already capitalized on momentum, a clear path, and an entry area. Guys, give me a Y or a hallelujah or something in this room that you see exactly what we're doing here. You can do it. With a little bit of study, with a little bit of effort, guys, this is going to be second nature to you. Maybe I want to lock in a little extra, and I'll say, you know what, a reversal bar has to take me out. If it forms a reversal bar, I'll exit, whatever. If it doesn't, I'm cool. There we go. I chummed the water. And watch, it's probably going to finish to the target, but that's okay, guys. We're talking about entries, right? We're talking about advantages. We're talking about keeping it pragmatic, keeping it methodical, waiting for the absolute best of the best so that we can have those advantages in place. I gave you checklists. I gave you a spreadsheet, and I'm going to talk to you about the path to success, guys, the path to getting to where you want to be. It all begins with taking pictures. Do you hear me excited? I feel excited, guys, because I'm blown away every time I look at the software, every time I watch Fibonacci work, every time I watch these rules come to fruition. My trading plan is almost the exact same trading plan that I gave you. There's a couple little differences based on my experience, right? Jay Solar, you're confusing a high probability trend trade with a medium probability trend trade, aren't you? This one has odds favorable. This one has absolutely nothing in the way. This one's coming from a termination that didn't create a full reversal. This is your best of the best entry. We don't worry about one divergence on a high probability trend trade, only on a 50-50, right? So you could have used this divergence high as your first target spot if you wanted to. But the reality is, Jose, remember that we're going to manage a high probability trend trade different than we'll manage. Because look at this. I just got a pullback just above the mid band right there. And there it goes. It's continuing up again. Does that make sense, Jose? I'm going to call you Mr. Solar so I don't confuse the other Jose. Awesome. If this were 50-50, Jose, absolutely. Totally different approach. Well, not totally different, but similar. Great question. And guys, John Novak just posted in the room too, right? There's that same darn picture. There's just a pivot with a loss of momentum. I'll call you Jay Solar, no worries. Don't want to be that formal. All the way up. Pivot, stop out, resistance, guys. Boom, look how the market reverses. All we're doing is we're recognizing patterns, right? All we're doing is we're waiting for advantages, and we are committed 100% to taking that trade when the advantages come to fruition. What do you say we put a circle where the market is likely to go based on momentum, where the market is likely to go based on direction, where the market is likely to go based on no termination conditions? So what's the deal breaker, guys? What's the one thing that may tell us that that market may not make it to its target? And we don't even have the potential for it right now. 3 divergences on the small chart. That would be the only thing that might take me out of this trade premature with this much momentum and a clear path, right? I've got 2, but 2 isn't a deal breaker when all those advantages are in place. 2 is just, hey, a little bit of a slowdown. No worries. We're good. Guys, that's our first hour. This is what we talk about in the first hour every day. Every day we talk about these rules, and I was on my way to talk about this. How do you get to where you want to be as soon as possible? Post your trades in class, guys. You're seeing people posting all these pictures. These people that are posting are getting to where they want to be faster than you guys that are not posting. Jerry, nice job. These people are getting feedback on everything that they see. They're getting feedback on everything that they do. They're getting management help. They're getting entry help. They're getting chart reading help. This is your path, guys. Post everything you do in the class, and let's have a conversation. I'm here live, Monday through Friday from 9 a.m. to noon. The second thing is tracking your performance in a spreadsheet. Guys, Nexgen provided you the spreadsheet. I put my personal spreadsheet in there for you. Every morning, use the spreadsheet. Go study what you did yesterday. Look at the trades you took and what worked and what didn't work, right? What felt easy? Alan, felt easy, didn't it? Odds favorable, no terminations, area inside. Calm, no sweaty palms. Roll the chair 6 feet back from the monitor and let it do what it's going to do. What didn't feel easy? I'll tell you right now, when I trade in determination conditions, my palms get sweaty. When I trade without momentum, my stomach gets queasy, right? If I just jump in without a reason, hope fuels the way, guys, and that's not easy. I'm not relaxed. I get nervous. So every morning, I'm going to go back and study what I did yesterday. You can hear your heartbeat when you're in a trade. That goes away. Ziba, is it quieter when you take the right trades? I totally get that. I can hear my heartbeat when I drink too much. Doesn't matter. That's okay though, right? Little adrenaline rush. Guys, a little study every morning is going to set you up for the day. You're going to be able to take these elements and work your way into what keeps you calm, what keeps you focused. There you go. I like it. This is the Abs of Steel Trader Edition. And guys, the second page of your spreadsheet is exactly what I showed you. Every time my rules are met for an entry, I take a picture. Every time you guys post a picture in here with a rules-based entry, there's times where I'm going to steal it, and I'm going to put it into my spreadsheet. And I give you credit, right? So I may take Alan's picture. Alan, I'm just going to put you on a pedestal this morning. I hope you don't mind. I'm going to take Alan's picture because it's perfect. It's everything that I look for. And I'm going to copy the link straight out of the room or straight off of that, right? And I'm going to open up my spreadsheet and I'm going to pick one of these spots and I'm going to create a hyperlink. I'm going to drop in his web address, just like I'm going to Google or eBay. And I'm going to call this Alan's Perfect Trend Trade Long because the rules are based for the entry. The rules are met for the entry. My checklist is made. And that's what I'm looking for. So I'm going to come back and I'm going to study these until I'm so good at them that I don't want to be in this classroom anymore. I want to go off and do my own thing. Guys, nothing's changed yet, right? Everything still says up. The momentum is still up. The direction is still up. I still haven't gotten a third divergence. I'm pulling right back to a mid-band inside of favorable large triggers. But look at the difference in the triggers, guys. Just going through it. Super strong, still outside, still looks good. Nothing's changed. It's hard to sit through a trade for this long. How come? Because this one bar on this smaller, faster chart is going to fluctuate while they try to decide what it is they're going to do. And you're going to start second guessing, and you're going to start getting nervous, and you're going to start telling yourself, oh my gosh, there's a downtick. Maybe it's time to get out. Keep it mechanical. Keep it methodical, guys. Keep it focused on if-then. If I get an entry, I take profits at $100. Then I go break even, right? And guys, break even's way down here. The correct entry was 28. Alan, what was your entry? We got into it late, 28 flat. Guys, that was your entry. You only had to get to 32 to make $300 on this trade. You made that. Most of you are out of this trade with $300 in the bank. And you don't care what's happening. You're waiting for everything. 28? Yeah, Alan, you were in at 28. It was perfect. And guys, I'm going to see what John Novak posted real quick. Man, what did you do, John? Oh, I love this one, but it's not where I can click and open it. trying to view the whole file. It's a note. I like it. Guys, I've heard this for years. And I'm trying to open it up because I'm going to read to the class and then I'm going to take a little break. If you follow your rules, every trade is based on the perfect look of your indicators. And if you have proven over time through hundreds of study reps that your looks win, you're confident. You don't have to, hold on, what does that say? You don't have to something. You don't have to think. You have to read your charts and follow the rules. When you take or manage a trade, it should be based on the look of your indicators versus your rules, with the highest probability of winning and managing your trade properly based on the look of your indicators only. There's no room for opinion, only rules in the look. And guys, let it be. Rules met, rules not met, right? You will not or you should not feel hesitant, scared, afraid, worried, fearful, anxious, nervous, frustrated, chicken. And guys, these are all from the classroom that people have talked about how they felt. Cautious, uncertain, mad, sad, impatient, bored, unsafe, or have issues, not confident, unwise, suckered, emotionally attached, confused, or second guess yourself. These feelings are your body's defense system telling you you don't have a trade you believe in. You haven't studied the trade enough. You should not be making this trade. And if you feel this way during a live setup, take a picture of it. Add it for study in your spreadsheet. Ask yourself why you felt this way. Post it in the room. What did the indicator say? Yeah, it was a tough one, Ziva, but I got there. But guys, read that every morning because when the rules are met, you're going to be able to take this entry. And guys, this first one netted $300 easily. And now we're waiting to see what happens, right? If you caught the best of the best, you got paid, you're done. If you second guessed, if you're like, oh, I don't know because I haven't studied enough, because I don't have the repetitions, which is okay, and you take the second best, well, that one didn't work out quite as well just yet. We're at the bottom of the window right now. Does everyone see that? We're at the very bottom of the window. We still have odds favorable. We still have a clear path. We pulled right to support that's right there at those large triggers. We'll see what happens from here. Guys, I'm going to take 5 minutes. I'm going to go stretch my legs real quick. John, you have to admit this out loud. You made a silly mental mistake. We'll come back and we'll look at it in a minute. Guys, I'm going to take 5 minutes. When I come back, we're going to start looking at all these amazing charts that you've posted. New users, I want to hear from you. Dano, Slow and Steady, Tam, Ron. Guys, I want to hear what you're doing. Shogun, I want to hear how your study's going. Show me some pictures. Tell me what you're doing, guys. Let's get you to where you want to be. I'll be back in about 5. All right, guys, we're coming back. Hey, let's see something real quick. I'm going to take this window of opportunity and I'm going to extend it for that last pullback. The rules are still met, right? Odds favorable momentum. The rules still met, no termination condition. The rules still met, I don't have three divergences. And the market pulled right back to the bottom. With two slowdowns, pulled right back to the bottom of the window. Now, who had the confidence to re-enter the market? Alan, are you double dipping? Did you make your 300, let it pull back? Because the rules are met, aren't they? 100%. And if you got in at the mid band at 28.75, you've already made your 100, 29. So you've already made 100, you're already break even. If that third divergence prints, well, then maybe you'll exit the trade. And if it goes to that fib, rock star, right? That's hard to do, guys. The rules are still met. The entry is still valid. The stop is in place. Nothing has changed. Guys, this is what repetition does for you. A little basic study gets you in on the first entry. Repetition and confidence has you making money the second time. Pretty cool, right? I thought that was pretty awesome. All right. I was hoping that it would do that. Nice job, Alan. Guys, I'm going to scroll to the top of the page, and I'm going to start looking at the pictures that you guys have posted today. I'm going to talk about what I see versus what you say you see. We're going to talk about advantages, disadvantages. We're going to go through and see what we have. John Novak started us off today. He loves to come in here and post pictures. I like it too. And one of the things that John talks about, and this is a pattern that he's been studying for a long time and making some recognition, second divergences. When you're on a large chart, second divergence that's lower typically predicates a move down. Second divergence that's higher typically gets one moving up. You'll also notice on his chart here before it moved down, there were actually three divergences in the same price range. And down it goes. Guys, this isn't a trade. This is just a study tool. This is just a way for you to recognize patterns that are going to help bring you success. Mike M. Mike M says, when a termination creates a full reversal, yeah, it's a little weak, right? Little overrun with those weak triggers, Mike. That divergence kind of secures that it may have been overrun. Everything says up, triggers are strong, path is clear, entry is perfect. It didn't catch your first one, you didn't chase it, so you get in right there at the bottom of the window. Man, that looks familiar, doesn't it? Almost exactly like what's happening in the S&P right now. And then off it goes to the races. First profits taken. If divergence prints, you're going to exit that trade, it looks like. Market flow confirmed the direction. Mike, great trade. Dude, you have been on fire lately. Really. Oh, there's three divergences. 1, 2, 3. Guys, one of the coolest things for me. There you go, guys. Great read. Three divergences on the ES. Nice. As it's amazing for me to watch you guys grow, to watch you guys be a little uncertain coming through, maybe not 100% confident in everything you do, and then watching you study and watching you post and watching you do all these things that get you to where you want to be, and then enjoying really watching you grow with the software, getting that confidence up, taking those great trades. Gary is the king of chart reads, right? Chart reads, maybe not execution. Sometimes he's just gauging whether or not the advantages are present. Guys, this is areas that really haven't broken yet. Divergence highs, resistance, right? He's pointing out potential trades using a checklist, 50-50 trade. What does he mean when he says a 50-50 trade? We didn't cover that this morning. We kept it super simple in the beginning. What's a 50-50 trade, guys? A 50-50 trade means that we have an area with the potential to break. Let me pull this picture up. A 50-50 trade means that we don't have a clear path. A 50-50 trade means that 50% of your trigger lines are through the area we're anticipating breaking. 50% of the trigger lines are not, guys. These 50-50 trades are not a high probability trend trade. 50-50 has nothing to do with whether you have a 50-50 shot of winning or losing. It is nothing more than a visualization. Your small triggers have gone through an area with odds favorable momentum, but your large triggers haven't made it to the other side, meaning that the area is not broken. Guys, 50-50 trades are essentially high probability trend trades, the look of a high probability trend trade, but a medium probability scenario, meaning that a problem exists, and that problem is we don't have a clear path. Areas have the potential to break, but when you take a 50-50 trade, you've already forfeited the advantage of momentum, or not momentum, of a clear path. The smalls are through, the large are not, the path isn't clear. So for me, my money is worth a perfect entry on the smaller, faster chart. For me to enter a 50-50 trade, I need no divergence on a smaller chart. I need strong triggers on a smaller. No, it doesn't have anything to do with the chances, Jose. It is nothing more than 50% have gone through, 50% have not. So let's change it. Let's call it a straddle trade. Would that make it easier? Right? Your small triggers and your large triggers are straddling the area that hasn't broken yet. 50-50 is just kind of the way it came out in the beginning because it's half of your triggers are through, half are not, right? You could just call it a 50 trade. But ultimately what it means is that the path isn't clear. So if the path isn't clear, then I don't have the advantage, right? I don't have rule number 2 met, which means that momentum in that entry area should not be sacrificed. One small issue exists. We can still take that trade. We can manage it assertively. Let the entry be perfect. 50% are through, 50% are not. No divergence, strong triggers, tiny window of opportunity. Don't sacrifice the other 2 advantages if the clear path isn't present. Does that make sense? It has nothing to do with the chances. It only has to do with the look. You could call it a 1 above, 1 below, a straddle, a 1 on this side, 1 on that side. That trade could work too. But ultimately it means that the areas aren't broken. So the straddle trades have to, absolutely, right? So let's go to the definition of a medium probability trade real quick. And this will help us out, guys. What defines it as a medium probability trade? A medium probability trade is defined when most of your indicators line up for a trade. John, I'm going to kick you out of the room. Most of your indicators line up for a trade. But a small issue exists. So for the straddle trade, we'll call it the straddle trade, your issue becomes the area hasn't broken completely yet, right? So your issue is that the area hasn't broken. So you're going to manage it assertively, meaning that if it gets any worse, if you start to lose momentum, right, or you don't have a great looking trade or more divergences print, that managing assertively is what's going to help you out. You're going to have to identify your problem spot. Most of the time, that's going to be the area that hasn't broken yet, right? So you might take a little bit of your profits there and get down to that 0. So not 50% chance, just a medium probability. 50 is too rigid, Jose. 50 is too rigid, yeah. It's just a medium probability trade, and your ability to manage is what's going to help you out, right? Being able to recognize 3 divergences. is going to help you manage the trades. And then Alan, moving your stop before the reversal bar, you put your stop right at the area inside, right inside of the window of opportunity, and it drops to the bottom and then it heads up. So a little bit of fear, not following that methodical plan, cost you some commissions there. That's okay. Guys, management is the second bite of the elephant. Management is the second piece of the puzzle. The first piece of the puzzle, guys, is getting those great entries. The first piece of the puzzle is making sure that you're in at the best spot, because when you're in at the best spot, it makes it more manageable, right? So, Derek, a high probability trend trade. Let me zoom out just a little bit. A high probability trend trade, every indicator on every chart agrees for the trade. Strongest triggers, nothing in the way, area for entry. This is it. This is your first 20 days just to learn entries. Just to get you to the point to where you can get in at the best spot. You have to manage every trade, right? As you learn to read your indicators, we talked about that super methodical, super mechanical opportunity for management that takes all of the initial out. Yep. And then that 50-50 trade, I put it on the same, I put it on that simple plan, guys, because I know that all of you are going to take this trade, right? So let me help you take it the most effective way. I want you to see the right here, 50-50, one area not broken, guys. One fib, one one-to-one, right? Don't take 50-50s with like 5 areas spread out, not broken. That's a lot of work to put on that momentum. So one area not broken. Do your small and your large charts have odds favorable momentum? If they do, let's make sure that there's no divergence on the small chart. And if there isn't any, I always ask myself, am I coming from a good top or bottom? Am I coming from a termination condition that creates a full reversal? I feel as though it creates an advantage for new users. Because there's a couple patterns that go with it that when it's not a good top or bottom, depending on the location of the 50-50, it can be advantageous or disadvantageous. So in the very beginning, while you learn to read your indicators, that's a pretty good safeguard. And if everything is right, then we enter the area, the same entry that it looks like on a high probability trend trade. And then notice this right here, guys. No divergence on the 5-1. And then just a little extra. Divergence, no trade. Guys, this is a safeguard for new users as you learn to read your indicators. It's a medium probability trade. I'm trying to give you the best chance of success as you learn to read. The management's a little bit different because it is a medium probability trade. Even the definition says you must manage assertively. You're still going to use the window of opportunity for the initial stop. You're still going to use the reversal bar for stop movement. But now we throw in, here's a condition. If divergence prints on that 50-50 trade, well, my entry conditions aren't met anymore. That's going to be an exit condition. My first contract's going to be at my trouble spot, and then I'm going to get to break even. I'm going to get to a 0 loss level as soon as possible. And my second contract, I'm not looking for home runs. I'm just looking to get paid. So J Solar, not a strong top. 50-50, right? Smalls below, large above. No divergence, strong triggers, window of opportunity doesn't work. So it is right on topic. And Jose, this is why I say, J Solar, this is why I say there's patterns that you're not going to understand in the beginning. There's a reason that I say let it be from a strong top or bottom. Because let's talk about the pattern that's in play here. When the market doesn't come from a termination condition. No, this is a great one though. Your mid-band becomes your first target, guys. So a 50-50 trade directly into a mid-band from a bad top works less than a 50-50 into a mid-band from a strong top. So even though the conditions are met here, your checklist as a brand new user while you learn these keeps you out of the trade. You want to post the right one? We'll take a look. But does that make sense, everybody? This is a pattern that you're going to recognize later. And this is exactly what it did yesterday. A bad top gave us a 50-50. But because it wasn't a great top, because it wasn't a termination condition that created a full reversal, put my checklist on it. Because it wasn't from a good top or bottom, I didn't take the trade. I didn't take the loss, right? So this keep it simple plan is designed to give you the highest chance of success until you learn to read your indicators and recognize these patterns second nature. That's why it was designed, guys. Ultimately, you'll come up with your own plan. Ultimately, you'll come up with what's comfortable for you. My job is to teach you to read your indicators, and until you can, I just kind of want to give you the best chance of success. I want you to get that confidence through the memory of success. And Gary, multiple divergences, lower divergence, 50-50. That's what started the talk on the 50-50s. Same thing, termination 50-50 with divergence. And I love this picture. So as you grow with the software, maybe as you add another chart, Gary says on a 50-50 look with that loss of momentum, he knows that it's not advantageous. He says this chart has to tell me, my range chart's going to give me confirmation. And here's the cool thing is it didn't give that confirmation right at the area. And he ends up not taking the trade. It keeps him safe. Ultimately, you get it a little lower. Don't know if this means anything but reversal bar above price bar and large triggers now flat. Your reversal bar will always be above the price bar if it's a place where divergence. That's just, Gary, are you with me real quick? Guys, these reversal bar markers, all that means, Gary, is that's where the first up bar forms. Doesn't mean anything. There's no rules that say use a reversal bar, right? Taking information that's not a part of your plan, yeah, it's just a reversal bar marker. That's all it is. These gold lines, guys, are the point where this bar becomes a down bar or this bar becomes an up bar. That's all it is. Yeah. Remember, guys, reads versus rules. Focus on the rules. If you're going to read a chart, let it be relevant to your rules. 50-50, coming from a termination. And then, Mike, there's your divergence, right? And guys, there's your safeguard. 50-50 trade coming from a good bottom. And I want you to see why that KISS plan was put into play, guys. And this KISS plan was developed through working with you guys. But let's go through it. Checklist every time. Let's police ourselves. Odds favorable? Absolutely. Smalls outside of the large? Absolutely. No divergence? Let's shut it down. That's it. Let's stop right there. Rules not met. Mike knows it, right? He even did it. Mike said, look at this one. I shouldn't have taken it. Wouldn't have mattered where he put his stop. Just wouldn't work. Designed to keep you safe, guys. Divergence, no trade. No divergence on the 5-1. Everything that I present before you is designed to make your life easier as you grow with the software. And then your plans will change as your ability to read charts changes. I promise it will. Gary, 50-50, one divergence, market flow signal, and it was right at news. So Gary says, nope, you can't talk me into taking a trade at news, which is always a good decision. And then Safia, you've got not a 50-50. I'm going to scroll down to the comments here because I think this is an important one. So what's a 50-50 mean, Safia? 50% of your triggers are on one side, 50% are on the other. You don't have any fibs here, so it can't be a 50-50, right? You have odds favorable momentum. You have a divergence. If you were running your synthetics, you would see that it actually is a 50-50, but you're not running synthetics. The only ones you're running, it looks like, are, well, all your synthetics aren't coming through because you had a 5-1 fib there. When is the midband? Zeba, when is the midband a termination condition? Do you remember? The midband is termination condition when the large triggers are a full bar away. So the only time my termination condition, my midband is a termination, is if the large triggers are a full bar away. If there's using that same reversal bar that Gary showed us, no, because what's a 50-50 mean? So a 50-50, let's go back to it. I love it. Great question. A 50-50 means that a potential termination condition has small triggers on one side of it and large triggers on the other, right? So fibs, absolutely. One-to-ones, absolutely. Divergence highs and lows, absolutely. But if the only time a midband behaves as a termination condition is when the large triggers are a full bar away. Where did my pictures go? Is when the large triggers are a full bar away, then it's not a 50-50. Does that make sense? I love it when the lights go on sometimes, guys. It happens. And that's exactly what Mike is talking about, that gap theory. So check this out, Zeba. You're going to like this. Here, price goes down, exceeds the midband. See how the large triggers are a full bar away? And it snaps right back? Right here, that midband is a bounce point. That's a termination condition. And look what it does. It snaps it all the way back up to those large triggers. Once it comes back to resistance, once it comes back to these large triggers, once it comes back to that area, the large triggers are down. The midband is no longer a termination condition. And these trigger lines are split. It closes the gap to the large triggers, and there's a potential opportunity for the short. And then when multiple divergences print, it becomes an opportunity to exit that trade. Does that make sense? You guys, this is why we keep it simple in the beginning, because you're going to learn stuff every day, and you're going to grow every day, and you're going to see things every day, and you're going to expand your knowledge every day. And it's going to get easier, and it's going to be more clear. So if you keep it simple in the beginning, life tends to get pretty easy. And then Gary, termination, waiting for the midband to clear because the large triggers are a full bar away. Termination directly into resistance. Gary, you have so many great termination pictures here. And here's one of those 50-50s that some of you might have taken, right? But those large triggers barely squeak through. No divergence, strong triggers, small window of opportunity. Smalls crossed over. Gary, your smalls didn't cross over until all the way over here. So we're on a little bit of a delay here. And Zeba, yours was a 50-50 for you. Yeah, mine was a 50-50 for me as well. So Gary, here's your pullback bar right here, right? Those smalls have barely eked through, but nothing's rolled. It is odds favorable momentum. It is strong triggers. It is no divergence. Midband where, Zeba? Here? On this picture? No. Not at all. Because when is a midband a termination condition? When the large triggers are a full bar away. It's the gap theory. When price pulls away from those large triggers really fast, hits a midband, the large triggers are a full bar away, it typically snaps back. So let's talk about, gap? So you know gap, right? So if you know gap, then the only time the midband is a termination condition is if the gap theory is in effect. Does wording it like that make it a little easier? The only time the midband is a termination condition is if gap theory is in effect. So, whoops. So let's go. The ES has given a lot of great lessons today. Price pulls all the way back to the midband. Here's a beautiful example. Large triggers remain a full bar away. There's no doubt in our mind. Not only is support acting, but so is that midband because of the relationship on the large triggers. And what's neat, guys, is if you go back, midband, there's those large triggers again. This is when I have that termination condition. Midband support, large triggers don't follow. Once again, this pattern repeats itself all day long. And here's one of those examples that we talk about when it's not a termination condition. So Ziba, this is kind of that next level, and this is for all of you guys. If it's not a termination condition, the midband is still your first target. So recognition of that, making sure that it's perfect, helps out a lot. And guys, the S&P is still doing everything that it said it would, but those divergences let you know that it was going to push lower. We still reached an area of support that was likely to hold. So you have a 5-1 at 61.77, and you don't have it over here. It's weird, though, because it looks like you've got some, but not all. It's the gap theory, Jose J. Solar. Price reaches the midband. The large triggers don't follow. They remain a full bar away. The midband behaves as a termination condition. And then the one that I just talked about, remember when we talked about good tops or bottoms? What's the first target from a bad top or bottom? No, Safia, it may be the template that you have on there. It may be that tick data is not exactly. So that's the whole lesson there, Jose, is when it's not a good top or bottom, that midband becomes the first target. That's all I'm saying with that. It doesn't mean that it's going to hold. Safia, double check with Jason, and he'll probably be able to tell you why some of your 5-1 fibs are on there and some are not. And there's probably a reason that I don't know. But here's a bad top, right? And it reaches the midband, and those large triggers aren't a full bar away. And that midband has a better chance of breaking with that momentum. Pull right back up to the midband. Large triggers aren't really a full bar away. It has a better chance of breaking. Bad top to support, termination right to the midband, and now it's working itself through. So I think that the point that I was making there, Jose, is that if you have a bad top, if you have a bad bottom, be aware that the midband is, especially in a strong trending market, if the market is trending up all morning long and you have a bad top, it's probably going to come back to that midband. Be aware that it may continue up, right? And then, guys, as you grow with the software, chart reads, right? It's a 50-50. Safia, that's your same look. The smalls are through, the large are not. One divergence prints, and it pulls right back and closes the gap to those large triggers. It creates a pivot stop out. Because it's the NASDAQ, I take a close on the correct side of the small. First profits at the trouble spot. J Solar, do you see it? First profits taken at the fib, at the problem. And then when a divergence prints, I exited the trade. And it didn't matter that the market went down after that. Took my entry, took my conservative exit, took my second divergence exit, managed just a little bit differently. Derek, do you see it? Managed a little bit differently because it's a 50-50. If this fib wasn't here, this second divergence would have never taken me out of the trade. But my plan will have me taking one with divergence because of some chart reading that I do. So your plan may ultimately be like my plan, but in the beginning, let your plan be simple, right? Let it be your plan. Keep it focused. Keep it basic. All right, Gary, termination. Small's on the wrong side of the large, directly into resistance. Thought about taking snapback, but was annotating. I don't know why you would. The smalls were down. The termination condition hit. The trend is down. The large are up. The smalls are screaming down. There's no rules met here at all. It's easy to say I was going to take a long after the fact, but how do you define it? How do you define that entry? What rules create that entry for you? Just curious. That's what I ask myself. Am I trading what I think? Am I trading what my rules say? All the time. So Ziba, let's talk about yours. 3 divergences in the same location. Amazing. Lower divergence. John Novak's pointed that out every day for a month now. Amazing. This is not yours? Whose was this? Oh, this was Gary's. I'm sorry. Smalls are down, large are down. He says this was right at news. I'm not taking it. Oh, we saw this one, but we saw it again. I agree with that 100%. If news is about to pop, man, it's okay. Hang out for a second, right? So I may have lost my spot. Let's go through. This is you, Ziba. Everything says up. The triggers are working their way up. You don't wait for a pullback. You're in at 55. Approximately 3 points above the mid-band. I like the trade. You got in a little early and it worked out for you, right? And you say the market moved against you. Large chart says up, large chart says momentum, large chart says everything, right? Is one divergence the market moving against you, Ziba? Or is that a fluctuation on a small chart, even though the large chart says go? I want you guys to start thinking about it like that. I love that you're a chatty person. You're going to learn more the more you chat. You're a bit confused about this bottom. The one-to-one position makes it a good bottom, but that cyan line makes you confused. All right, so what does the cyan line mean for you, Ziba? What does a cyan line mean? No, it doesn't. A cyan line means that there was divergence, right? What's divergence? A loss of momentum. So let's go back to the termination condition pictures. When we talk about, we'll do one from a low as well. That's okay. You can. Don't say you can't get it right, because you can and you will. You just don't have it right yet. Not the same thing, right? When I was 4'8", I said I could never hit 6 feet. But the reality is I did. I just had to be patient. I got there eventually. So Ziba, let's embrace why. If I'm not disappointed in you, you shouldn't be disappointed in you. And I'm still one of your biggest fans. So let's work off of that, right? Let's go with that positive energy. What's the recipe for a termination condition, Ziba? We've got it right here. Price reaches an area, right? Write it down on a piece of paper in front of you. The only way for something to be a termination condition is if price reaches that area. That has to happen. Is that easy enough? So when this divergence line prints, right, price didn't reach that area because divergence doesn't print, Ziba, until, here, I'm going to make this one really big and take a picture. And this is such an important lesson. And I think that, Ziba, you'd be surprised at how common this is. So this divergence line right here, it doesn't print until the market's all the way down here, okay? So what that means is this can't be a termination condition because price didn't reach it. It wasn't there. Does that make sense? For everybody that's learning their termination conditions. Because this divergence doesn't print, doesn't become a real thing until all the way down here, that's when the calculations are done. This can't be a termination condition because price didn't reach it. But when price comes back to the divergence line, now price reaches the area, trigger lines stay below. Now it's a termination condition. Does that make sense? And that, if you embrace the recipe, the only way for a termination to be a termination is if price reaches the area and then the trigger lines remain below. And Ziba, this is such a common thing that I made this picture for somebody once who was having the same challenge. These divergence lows and highs are the most misunderstood termination conditions. And what it means is that this divergence high or low, it represents a point in the market where not only could the in control force, like buyers when it's pushing up or sellers when it's pushing down, not push any further, but the other side stole their momentum, right? So when that happens, when the other side steals their momentum, it creates a line in the sand. And this line in the sand is where the sellers said, you know what, buyers? We're not letting you go any further. We're going to take control here, and I'm going to rob you of momentum. So I'm going to put this line in the sand, and if you guys get a little antsy and try to fight back, this is where I'm going to unload my guns on you. So if price reaches that divergence high and the triggers don't follow, we know that the sellers mean business. We get one of those divergence, those pivot stop outs, and that's a powerful termination condition. Does that help a little bit? Safia, will you post the picture again? Absolutely. I thought there was a 5-1 chart right around 61. There was a 5-1 fib right around 61. Looking at it correctly. See if I can get it to pop up here real quick. Here we go. 15, 561.77, 15, 61.77 would be right about here, and there is no fib. It's not on the 34, I'm sorry, but it is on your 13.2. So your 13.2 fibs don't appear to be carrying over. But that 81 fib did, right? And that's synthetic here as well. So I'm just curious. Okay, hopefully that helps. Yay! All right, and awesome. So Ziba, that's a great lesson. So go through, and this is for all of you that are studying termination conditions. Whoops. Embrace that recipe a little bit, right? And just go through it. Price reaches the area, no triggers go through. Termination. Price reaches that line, no triggers go through. Termination, right? And you can go through and just get comfortable with the looks. Oh yeah, we're not done with your photo yet. We still have a lot to read. So let's see. You had quite a situation here. Due to your ATM, your stop was so close, and then your Ninja got sticky, so you couldn't move your stop. So you decided to close the trade. Is there any way to set my custom ATM as default? Yep. Absolutely. So here's what you have to do, Ziba. What you have to do on NinjaTrader 8, and I know that this is going to be crazy that there's actual instructions, but let's go to it. So that's not it. So you're going to go through and you're going to set your settings, right? When you have all of your settings right, I know you have the pictures of them, click to save as a template. That's the part that you haven't done yet. So click Save as Template. Did you? And then after you save it as a template, after you name it, you have to click OK. Something had to be missing. Did you... Ziba, if you did all that and it's still not working, then you may have... Oh, well, that may be because if it crashes, you don't get to save it. So try this. Go through and do that, save it as a template, and then right after you save it as a template, go to Workspace and save the workspace. That crash may be affecting it. So the second you click Save as Template and get back, save your workspace. And that way, if it crashes, NinjaTrader has already been told that it needs to do it. Cool. You're welcome. And this is what the classroom's for, right? It doesn't have to just be trades, guys. We can talk about troubleshooting, getting you where you need to be. We're going to talk about advantages, disadvantages. We're going to talk about everything in here. This is your classroom. And Ziba, you said you're waiting because there's a termination condition that needs to clear. Great picture, reinforcing your rules, making sure that you're staying on the right side of things. And then Mike, 50-50, right? Smalls above, large haven't quite cleared the one-to-ones, no divergence, strong triggers, perfect entry, money all the way up to fibs. Golly, Mike. You are putting on a clinic today. You get the microphone tomorrow, Mike. You're teaching this class tomorrow. And then Gary, caught between termination conditions, right? Caught between termination conditions. Not sure what the short was. Nice trading. No rules for it. I'm not sure exactly what you were doing, but it worked out great. Nice job. Man, you guys posted a lot of pictures today. I love it. Keeping me busy. New users, let's take a second and talk to you. How we doing? Slow and steady, Tam, Sean, Samuel. Guys, how we doing? If nothing else, we're learning that what we do, that what we teach works, right? You just got to learn how to work it. Tony, momentum, clear path, jump in, jump out. Absolutely beautiful. Jonathan, everything says up. The path is clear. Getting in a little bit early, right? Just a little bit. No worries. Turn on your simulator, slow and steady, right? Turn it on. Take some trades. Give it a go. Show me some pictures. Break everything. Jonathan, little bit high, right? The right entry was just above the mid band here. But nice. Stops in place, came up. You get to make a little money on the trade, Jonathan. Nice trade. Remember, guys, rule number 3 says that we're going to buy or sell a pullback at an area inside of favorable large triggers. Use those areas. Those areas behave as a bounce point. Look at this one, 50-50. Everything says up. Awesome entry. Money, money. Coming from a strong bottom. Mike M. again. Ron, everything says up and the path is clear. And Ron tries to throw me off. Ron takes a trend trade and gets paid. And then he takes his trade. Ron, you're just showing off at this point. Great trading, man. Taking that high probability trend trade. That's that 1 in 100. And then jumping in and sticking to your plan. No worries. So here we go. Jose, you tell me if you're getting it. What do you think? Termination, full reversal, everything says up, strong. You get 1 divergence, right? 1200 for the day, back to sim. Beautiful. Jose, you take it, 1 divergence, right? Some people won't take this trade with divergence. You're saying because of the strong bottom, you're going to give it a shot, right? Great entry. Beautiful entry, creates a manageable trade, and you take profits at the first trouble spot. That's amazing. And then the only other thing that you could have done different is maybe taken a portion off at the trouble spot. Second gets hit for break even, but man, we're in this to get paid. Jay Solar crushed it. Your management's taken that progression, isn't it? Now you're thinking if then. Now you're thinking this isn't high probability. Let's be aggressive. Let's make that money. Let's get out and let's wait for it to be perfect. Man, this is that growth that I love, guys. This is that growth that gets me excited. I just got goosebumps. Whew. Great management, man. Nice job. Let me see where I'm at. Oh, I love it. That one made me happy, Jay Solar. Thank you for that. Sophia. Bump, 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 bump. Termination, full reversal, mid-band, but the large triggers aren't a full bar away. In at the area. Do you see how much it changes, Sophia? That's the only thing that I might say here. Do you see? Oh, it's a 50, it's not even a 50-50, maybe. That fib, it stopped printing. Real money too? All right. Sophia, first entry, not quite there, right? This was your best of the best entry. One divergence coming directly from a fib, mid-band. By the time you get down here, you've got weak triggers. You have a huge split between your large and your synthetics, and you're coming from a pivot stop out right at support. Do you see all those things that the small chart's telling you? You might be on with Jason. And this is why I was saying it's odd that this fib isn't on this chart, because a 98 and change fib makes this a termination condition, and it kind of keeps you out of that situation. But you're with Jason working through that right now, so that's good. And then Tony again. I bet you this one revolves around momentum and a clear path. It most certainly does. Let it clear, get in, get paid, get out. Tony, man, you've really found your groove on this one. Great consistency, guys. You know you're becoming a stronger trader when every trade looks the same. John Novak, termination, clear path, odds favorable, jumped in and you chummed the water. Look at that stop, guys. John, I'm not beating you up because I really do think you're brilliant, even though Mom liked you better, right? No divergence. Guys, look at that entry, like a sniper. And then that stop got moved just a little quick. And notice that his stop is right in an area of resistance inside of favorable large triggers. And the fact that John Novak would do this for you guys to teach such a great lesson about putting your stops where the market shouldn't go. Guys, you're going to do stuff like this. 27 years in, you're still going to have a little lapse of judgment. It happens now and then. Don't beat yourself up. It doesn't do any good, right? Just a silly mistake. The trade was right. The read was right. The conditions were right. Everything was right. The key is to not do it again, right? John, great trade. You don't get to beat yourself up. I'll pick on you for something better than that. It's rare when the little brother gets to go after the big brother, right? And you're right, even professional golfers. And then Safia says, here, John, let me show you what you should have done. There's that great entry. Well, talk to me about this exit, Safia. First target hit, break even +1, I'm assuming. I don't know, Ziba. I have never been in a room with her. It looks like she is quick profits and get to break even +1, right? But there's a difference between having the wrong ATM set up and letting it hit, and then moving it because that's where it is. I don't think so. I think hers are in the right spot. I think that her rules say when the first target is reached, go break even. You'll see that she got out at 92.25. She got out down low, first profits, and then just break even. Yeah. No worries. But that's your ATM plan, right? That's your management plan. Take profits, get to break even. It either runs or it doesn't. Cool. NASDAQ, break even would have kept you in. Break even plus one got you out. It happens sometimes. But remember that NASDAQ's a different animal. It's going to fluctuate a lot more. And you may want to reconsider putting a stop right at a mid-band when everything says down, just for long-term success, as you grow with your plan. Right now, just keep it consistent. Guys, price reaches support. Absolutely no trigger lines go through. Large triggers are up. Guys, this isn't a medium probability trade. This is trading directly into a termination condition, and this is being a heads-up trader enough to be able to capitalize on it. This is the one I told John I was going to kick him out of the room for. Guys, that's a termination condition, plain and simple. You don't even have odds favorable momentum. Mr. Novak and I will discuss him posting these in the room. But remember, what he pulls off, the average mortal can't, guys. Let's see where we're at. Daryl, good to see you today. It's always fun when I see trades from people that I haven't seen in a while. So, Daryl, we've got that odds favorable, right? Everything says down. The path is clear. Couple divergences, and this one doesn't work out. And once again, I think that an awareness... So small chart, large chart, guys. When we talk about large charts, when we talk about that 13.2 or that 34.5, let me talk a little bit about what Nexgen's Fibonacci has been, right? What are the fibs? When you're looking at a large chart versus a small chart, guys, your large chart defines areas. And when you define areas, typically your large chart is going to contain Fibonacci from a higher time frame, and it's going to have those same Fibonacci areas from your smaller time frame. And when you have those in place, when you have this 4502.79 right here, what you find is that it's a 50-50 trade, and it's a 50-50 trade from a bad top. And with two divergences splitting the fib, the likelihood of this trade being successful goes down dramatically. And I know that NinjaTrader 8 creates some challenges for a lot of people running that synthetic data, running those fibs, running that tick data. Daryl, one thing that I do, and I never tell people how to trade, but I like to share things that I do. When I execute, I do my analysis on NinjaTrader 7 right now because with my computer, it's a more stable platform for me. And I do my analysis here, and I do a no synthetic fibs here on my 8, and that's where I execute. And it helps out a little bit. But normally, in a normal world, this blue line is over here as well. You can even take just a drawing tool and put it in. But what it does is it lets you know that that's not quite a clear path, and those multiple divergences might create a bit of a challenge for you. Oh, no worries. So, Daryl, if you right-click on your chart, no worries. If you right-click on your chart and you go to Data Series, and this is on 8, there's going to be a box that says Tick Data. And when you check that box, Tick Data, it's going to put synthetics on there. It does affect stability a little bit, which is why I can say if you have a 5-1 fib, you can just take a horizontal line and draw it on there, and you know that it's a Fibonacci area, so you can respect it a little bit in terms of whether or not you're trading into a 50-50 or whether or not the path is clear. And I'm telling you, just right now, without that fib there, Daryl, it's a beautiful trade and it's perfectly executed. So right click and activate tick data. And we're going to keep going through and seeing what people are doing. John, super termination spot potential. Every chart says don't do it. Nice job, John. Great termination condition. I think we may have gotten through all the pictures. Oh, Joel, you got one for us. Let's see, Joel, you've got smalls up, path clear, perfect entry. Just doesn't work out. What do you think, Joel? I feel like that was a good look. I feel like you had the advantages in place, and I think that your entry is perfect. I think this one just didn't work out. And I know that that's frustrating sometimes. So, Daryl, if you don't see the box, let me come to bum, 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 bum. What you may need to do, Joel, it was good. It was a rules-based trade, and it was awesome. Thank you, Alex. So there's your tick replay one. But if you don't see that, then what you're going to need to do is you're going to need to open up 8. And let me see if I can open mine up real quick, get you where you need to be. We won't tax Jason this morning since we've made it through our pictures. No, Joel, it was great. You're doing awesome. The rules were met. It just didn't work. It was just a cost of doing business. That's hard to accept sometimes, but that's exactly what it is. Let me pull over. And Daryl, are you with me? Let's go to Tools and Options, and let's go to Market Data, and make sure that is it Show Tick Replay is checked. And then if this is checked, you should be able to see on your chart to run that tick replay. Are you with me, Daryl? I think we lost Daryl. Okay, cool. Let me know if that helps. If not, we'll get you fixed. It's what we do. John's first trade after the low on NASDAQ was a momentum style trade, which meant that his termination changed the direction of his triggers. His triggers have rolled, and there is a quick momentum style with strong triggers. Clear the fib, pull back to the 1-to-1s with no divergence from a termination. Different style trade, guys. Good looking trade. And then John, termination, no triggers through, termination, termination, no long trade. Nice job. You said it was another great spot. For what? I guess would be my question. Great spot to not go long because of the termination. Jose, clear path. What would be the read to get the most out of this trade? Great question. You've got weak triggers, right, Jose? So you're losing momentum. Let's just go through it like that. You've had one divergence. So, Jose, when you don't have the best look on the 13.2, that's where you're going to let that small chart come through a little bit, right? Smalls are working their way inside, but Jose, check this out. Every trigger is up now, right? We've gone through the little pushback, we've gone through testing support, and now everything's rolled in the direction of the trade. So Jose, for me, definitely not losing, and I like that you're not losing. If this makes an up bar for me, I'm putting my risk behind that bar. That's my pivot. I'm following pivots on the way up. And then I'm managing. If I get a third divergence, I'm probably out. But yeah, with all triggers up, I'm going to see if this thing's still going. And then if it creates that pivot, because my areas aren't inside of favorable large triggers anymore, that's probably where I'm going to manage out of this one. Or I might say 53.50. If this prints a second down bar with weak triggers, maybe I exit that. So it's really up to you. How much are you willing to risk to get to the next area? NASDAQ will fluctuate, but now you're on the right side of those small triggers. So I hope that helps a little bit. NASDAQ loves to run. And you are in right there, yeah. Just waiting for the small chart to tell you. But just the laws of termination conditions suggest that this area is going to hold, right? Because all the trigger lines are above it. So you have to wait for that small chart. Man, we made it to the end of pictures, guys. S&P has gone full wonky, hasn't it? Hasn't done a lot today. Crude oil. Guys, some of you took a loser here. I hope you did. You might be a little aggravated by it. But that's everything that I look for in a trade, and it just didn't work. So much so, you took it, Daryl? Great. I hope everybody took it and lost, and that sounds horrible, right? But you had a termination condition that created a full reversal, and you had a full reversal that gave you odds favorable, clear path, strong triggers, area inside. Oh my gosh, guys, I would lose money on this trade every day. Because if I take this look 100 times, I'm probably going to win 80 of them. Let's go to the perfect long trade. Let's see what it looks like. Looks exactly the same. Termination, full reversal, strong triggers, pull back to the area. It looks exactly the same, guys. We're just focusing on those patterns, focusing on those advantages. 1,000 out of 1,000 times. Wild horses couldn't keep me out of that trade, guys. Nope. You didn't. Guys, if you took that trade, you took it perfect. And Daryl, honestly, your window of opportunity is one line wide. It could have been a really low risk trade right there. I think it's a beautiful trade. I think every rule was met. And like John said, you can't have 70% winners if you don't lose 3 out of 10. Straight to resistance. When resistance is hit, no triggers go through. Jose, it made it. Or that was probably a while ago, huh? NASDAQ moves, doesn't it? This would be the only warning. Termination condition on the 21, Jose. We found your nemesis. You're absolutely right. That could have been a warning. But if you're not using that 21, guys, it's just a cost of doing business. That's it. TJF, let's see what you did, my friend. You said everything is up and the path is clear and the pullback happened and you took it and it comes back to support and works its way up and you make some money and you get out break even. TJ letting the large chart lead the way. Odds favorable, clear path. The triggers are a little bit wonky here. Large is down, synthetic is up, so we've got a little indecision. But you're pulling from that area, and with that indecision, it pushes back to support. Your stop was in the right spot. And then as it comes up, you make money. Nice job, TJF. Letting the large chart lead the way, right? Letting the large chart sheet lead the way. Can't stress that enough, guys. That's going to be your saving grace a lot of times. Look at that termination. Creates a full reversal. Full reversal gives me odds favorable. Odds favorable right now is a 50-50, which means that if I don't hit that divergence low first, well, we just hit it. I would have been looking for an entry. Now I'm 50-50 on a divergence low. That S&P gone sideways. Crude oil, bad top, right? Strong triggers, 50-50. There's divergence. What does your checklist say? Guys, I'm going to take 5 minutes. If you have a question for the last hour, pop it in the room. If you have a picture to share, pop it in the room. Let's let you guys drive the last hour. What do you want to talk about? What do you want to see? What's going to make you a little bit better today? And we'll focus on that. I'll be back in about 5 minutes, guys. All right, favorite people, let's get into this last hour. See what we can pull off. Excuse me. So last hour's for you guys, right? What do you want to talk about? What do you want to see? What do you want to do? Zeba, let's see what you did. Is this trading into a term? All right, so Zeba, let's do the recipe again, right? Repetition is what's going to make it stick, I promise. What is the first part of the recipe for whether or not we're trading into a termination condition? Do you remember? Guys, anybody can answer? It's the same every time, I promise. It's the same every time. Price reaches, absolutely. So Zeba, did price reach the area? Nope. So is that a termination condition, or can we change the verbiage? Can it be a target? If your rules are met, if you enter a trade, 15,584.50 is a target. Absolutely. You've got this. So where's the picture of the trade? Let's take a look. No worries. Zeba, do losers happen? Are losers a normal part of a positive equity curve? The answer is yes, I promise. So check it out. Jay Solar, I know you're watching this one, right? 50-50 trade, right? Smalls are above, larger below. So this area hasn't been broken yet. Medium probability straddle trade, one above, one below trade, whatever you want to call it, right? One divergence prints with those strong triggers. Whoa. If you chose to enter this trade, your stop had to be here initially, right? Your window of opportunity was right here. Reversal bar prints. Stop gets moved. You're okay, Zeba. First trouble spot, or if you were in at 40, you've already made your $100 break even. If the conditions change, whoop, you made your first trouble spot. Probably break even on the trade at this point. Jay Solar, do you see how you would manage that? If you entered, you identified the first trouble spot, take quick profits, get to break even. And if you did it like that, that's like 150. Guys, that's your medium probability trade. Where does momentum say we're going? It says we're probably heading to 76.18, 76.19. Medium probability trade. Manage assertively. There's been no reason to manage yet. Everything still says down. If another divergence prints, it becomes an exit condition. Guys, it's consistent. The idea is to do the same thing every time, to do the same thing. Every time you enter a trade, you enter the trade because the same conditions are met. Every time you exit a trade, you exit a trade because the same conditions are met. I don't know if you guys know this, but I created the absolute most simple approach to trading that anyone in the history of trading has ever seen. And I don't know if that's true. But there it is. Simplicity, simplicity, simplicity. Guys, I'm going to give it to you again. I'm going to let you have this simple trading plan once again. It's up to you whether or not you follow it, but I'm telling you, it's going to create an awful lot of advantages. All right, Zeba. Bum, 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 bum. Let's take a look. So 1584.50. So Zeba, when you took the trade, had price reached the area? Hey, RDR, you just... Welcome to the room. Nice to see you. Price reaches the divergence low. Triggers don't break through. So Ziba, target or termination condition? Termination condition. So you traded into a termination condition, right? Beautiful entry. No, you didn't, Ziba. There's no pullbacks on these bars until the one that comes off of the termination condition. 83.60 was the low point. $83.60 is the low point. Price reached that area at $84.50. I just saw your post. That's a lot of eights. So Ziba, can I tell you what happens? Yep. And I was just going to say that. Right here, you're excited about the trade, right? And guys, this is normal for everybody, so I'm excited to share this with you. Right here, you're excited about the trade. You're like, yes, 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 odds favorable, termination, here we go. Oh my gosh. Ziba, I know you're listening to your heartbeat right now going, woohoo! And you're waiting for that pullback up here because this is a target, not a termination condition, and you can't wait. And you're so excited that just like you said, you're just watching, give me an entry, give me an entry, give me an entry. And you forget that if it reaches that area first, then, oh man, we hit a termination condition. We just got to relax for a minute. It happens to everybody, Mike. We form opinions about what we need to do, and we forget to make sure that the rules are still met. Ziba, I've done it a million times. You're going to do it a million more. It's okay. And everybody's coming out of the woodwork to remind you that you're totally human. Yep. Guys, we all do it. Because we know what this says, right? We know that the conditions are perfect, so we start looking for entries. And this is where, if I see that target, and Ziba, you gave us the perfect picture, right? You gave us the perfect picture. The rules are met. It's absolutely beautiful. You know you're waiting for a pullback. All you need is for it to happen. This is where my brain tells me, and maybe this will work for you, because guys, it's no secret that my challenge was trading into termination conditions. I've made that very clear in this classroom. What I had to start doing is when this was my picture, I had to start telling my brain, if I reach 84.50, the trade is off. If I reach 84.50, the trade is off. And I start just saying it. 84.50 becomes the termination if price reaches it. So if price reaches 84.50, I'm going to pull the plug on the trade. And I have to start talking to myself before my entry. And it helps me out. And maybe that'll help you out as well. When the market is pushing up. And let's see what the market's doing right now. So there's that 50-50, and they made it to fibs, right? But as it's coming this way, and I'm telling myself, this is my target, right? This is my target. I'm looking for an entry. This is my target. This is my target. There it is. No, no ma'am. Midband doesn't make it a 50-50. Ziba, what is a 50-50? Half the triggers are through the area that may act as a termination condition. Half are not. This Fibonacci support is the 50-50. The large triggers are above and the small triggers are below. No, not shame on you, Ziba. That's okay. Guys, I'm the only one allowed to kick your ass. You don't get to do it. All right? So if I'm not beating you up, don't you start. Nobody gets to beat up my students but me, dagnabbit. Ziba, it's just repetition. Ziba, I took college algebra 4 times. 4 times to be able to get a failing grade high enough to sweet talk the teacher into letting me have my grade so I could go off to the University of Houston. Gary, everything says down. Look at that perfect entry. Nothing changed. 3 targets hit. Gary, perfect. But Ziba, do you know what? I did eventually get there. But I didn't get there as fast as the people around me. Gary, rock star trade, my friend. Pam, beautiful. Pam, you're just going to show up out of nowhere. Hey, what's up, guys? I own software. Look how good I am with it. Beautiful trade, Pam. Thanks for sharing that. Nice. And look at that, using that line. All right, Jay Solar. On the example of oil, you think where the trade didn't work, the issue might be the setup. Oh my gosh, Jose. Data series, all charts, 10 days, indicators, 5-1, false on... Jose, I have absolutely no idea what you're saying. I have absolutely no idea what it is you're trying to say, and please, this is respectfully. Let me find the picture that didn't work. That's not it. Hold on. I'm going to find it. All right, Jose. Well, Daryl, those were those synthetics, right? That's what we're talking about. But let's look at this trade, guys. Are the smalls outside of the large, Jay Solar? Are the smalls outside of the large? Let's go through it together. Guys, your brain is going to try and make you smarter than you need to be. Your brain is going to try and convince you that there has to be something on God's green earth that made that trade not work. Do we have momentum? Absolutely. I'll answer it. No, that's okay. Everybody, work through this one with me. Help me, because I think I did something wrong. Do I have momentum? Rob K says yes. Jose, all we're asking right now, does my large chart have momentum? Are the small outside of the large? Are the large wide? Or are they angled in the direction of the trend? Absolutely, right? Do I have a clear path? Ziba, you answer this one. Has price reached an area? Everybody answer it. Do I have any termination conditions present? No, absolutely not. So I have momentum and the path is clear, right, guys? It doesn't matter what my settings are. It doesn't matter how many days back. It doesn't matter anything other than rules 1 and 2 are met. So I go to my smaller, faster chart. See, but they're still outside, right? So we're not even worried about it. We don't worry about weak tops. All right, so from the highest point of my trigger lines to the lowest point of my trigger lines, right? Where's my area of support inside? That's it. I've got one spot per the rules where that market is likely to continue. Guys, give me a Y in the room if you see it. Odds favorable. No termination. Area of support inside of favorable large triggers. Jose or Jay Solar, are you with me? Triggers and fibs are two separate entities, Jose. Triggers are not fibs. Fibs are not triggers. Did you take the trade? Did you show me the trade? Did you have a fib present? I'll listen. Show me the picture of what your chart looked like, and let's see if there was something different. Because I've never in my life taken a trade and said, oh, shoot, let me check and make sure that everything's right first, right? So all we can do is go off of what we see in the moment. And based on this chart, it's a rules-based trade. And then, Gary, you take the second entry with everything down, and it goes right to the fib. Gary, nice trading. with directions, right? With momentum, with everything saying down, medium probability, but a clear path. You get in when everything points down and it takes you to the next area. Gary, this is solid trading, my friend. And guys, there may be discrepancies. And Mike, thank you for saying that. Sometimes somebody's on 5 days back and somebody else is on 10 days back. Sometimes somebody cleaned out their cash. Okay, absolutely. So Jose, let's go through, and I think that it was a language issue there. Because, so your triggers are the moving indicator, okay? Small triggers, large triggers. These are what they are, right? The Fibonacci areas are separate from the synthetic triggers. So what we're talking about, you're talking about synthetic fibs, right? Making sure that the areas from the other time frames are printing. I see what you're saying. So even, and this chart happens to have synthetic, and I know that it has synthetics on it because do you see how some of them don't extend? I see exactly what you're saying, Jose. So let me show you a trick. If you're worried about your synthetics not being there, go to your 5-1 chart and take a horizontal line and put it right over a fib. And it'll show up on your 13.2. And this fat line comes from a 21.3. So if I open up a 21.3 and do the same thing, even without running synthetic data, I can get these fibs on there. Well, not having the 10 days on all charts has nothing to do with whether or not they'll show up. Having 10 days, so Jose, 10 days worth of data is going to produce different fibs than 5 days worth of data because there's twice the amount of pivots, right? Twice the amount of information, twice the amount of calculations. I think I'm slowly, and I'm talking this out, right? So, Jose, did you skip the trade because you had a fib present or because you were afraid that maybe there should have been a fib there? And guys, sometimes we have to talk things out, and it's never a negative. If you and I go back and forth like this, it means that we're working to the root of the problem together. Okay, you don't even trade CL. So, Jay Solar, let me encourage you. Trade your charts. Trade your charts. Trade what your charts say. Man, look at that. Held like a rock, didn't it? Trade what your charts say. And then if you think that there's a challenge with what you're doing, or you notice, yeah. And if you notice that there's a fib here and not there, and this is for everybody. If you look at my charts and they don't match your charts, remember, guys, I turn stuff off and on all the time, and I reload stuff all the time. Maybe I changed something, maybe you didn't. But what is my NASDAQ? Let me see. My NASDAQ is 5 days back. Mike, are you 10 days back on NASDAQ? Or Gary, are you 10 days back on NASDAQ instead of 5? Let's see how it changes if I go from 5 to 10. And guys, this is great. And Jay Solar, I think that when you start typing in this room, we get amazing lessons. So I want to say thank you. Let me change it to 10 days back, and let's see what it looks like 10 days back. Looks pretty much the same at 10 days back. So that's a good thing. It's consistent. But I want to, just for the people that aren't as clear on this one as Jay and I may be on it, this is Pam's chart. And Pam absolutely rocked this trade. I love it. But let's look at something. What Jay Solar is saying is her 76.40 fib doesn't show up on her large chart. So the synthetics aren't being printed. You can't see that potential Fibonacci area. You can't see that it's a 50-50. So guys, if you're not running anything other than the native lines, you have to be aware of the other areas. Jose, thank you. Jay Solar. I think we got to the same place, right? But sometimes typing is hard. It's hard for me to catch everything without a picture. It's hard for me to catch everything. But we always get there. One thing that I've found to be true is, guys, we're always going to get to where we need to be together. We always are. What do you think? Termination to termination to termination. Should we let it break before we look for longs? Guys, your S&P has absolutely stuck. It has done nothing for the last 2 hours. If the market you're trading is doing nothing, guys, do nothing. And then crude oil, everything says down, right? It ended up turning, and Jose Trades pointed out this was a pivot. Yeah, you can change contracts, right? You can go from crude, go look at the S&P. If crude isn't moving, look at the S&P. If the S&P isn't moving, look at crude. When you're really comfortable with your rules, maybe look at the NASDAQ, but look at this one. Isn't that pretty? There's usually something somewhere. And then it starts to weaken a little bit. Does it? Then Ziba, I wouldn't change your market. And guys, so the challenges that are going on with these, I guarantee you there is a team of next-gen hired programmers trying to alleviate it. Weak triggers at support, multiple divergences, weak triggers, no areas inside of triggers. Do you guys see how all I'm doing is I'm talking through the things that I look for to get me into trade? I'm looking for momentum. I don't see it here, but I had it here. I've got multiple divergences and weak triggers here. Here I had strong triggers and only one. Big difference, right? Let it be obvious. And if you take off those areas, guys, even without the benefit of Fibonacci, if you always commit to rule number one, that was your trade, wasn't it? That's the one that yields results. Anything can happen triggers. There's that turn in the market. Triggers aren't strong yet. There's a turn in the market. Fibonacci support hit. I remember that one. Check it every time you're powered. Go to gaming. Look at this, guys. Strong triggers. There's a tail. Medium probability. There's a tail. Bet you that was one of those mid bands. Look at the large triggers. Didn't follow. Ba-boom. Over and over, guys. Let's learn the patterns. Because once you learn the patterns, everything else falls into place. Whoops. Let me put my template back on. All right, Ziba. Ninja 8 stability instructions. So what he's talking about, let me see if I can help here real quick. So here's one from graphics. Click on high performance for your graphics. That's one thing. You do it every 15 minutes. Whoa, what did I do? And then he's talking about edit your power plan. So down here, if you put edit power, it'll bring up that power plan. Let's see if we can do it. There we go, edit power plan. And it's going to bring up a control panel. And what it's going to do is it's going to say, make sure that you're running at high performance. make sure that it's on its best of the best, that high performance. And then as you scroll down, you're going to make sure that your computer never sleeps or hibernates. And I think these are the ones that Mike was talking about. Sync your windows every now and then. I don't have any idea why that helps, but John Novak says that it helps, so I do it. And all those little things kind of come through to help you out a little bit. Weak triggers, add a fib, couple divergences. Look how it's pushing up. Gary, termination creates a reversal, 50-50 on the high end, no divergence, straight back, nice entry, making money. Great job, Gary. You are crushing your plan today. And then John, termination, but triggers are super, right? There's that 50-50. There's that first problem. There is no barrel. It's Yoda stuff. It's do or don't. Do you know why, Gary? Gary, you're a rock star on Sim because you don't trust it enough to do it live yet. That's the only reason. That's the only translation. Is when you go from Sim to live, super strong, but it moved, right? No, you're absolutely right. Termination, strong, no divergence, pulls back. Man, that's a perfect one, John. That's the perfect 50-50 trade. Because of the termination, creates a 50-50 with odds favorable momentum, with no divergence, with a pullback to the area. And then there's that divergence that prints, right? There's your, hey, maybe not anymore. Guys, if you find that there's a difference between live and sim, you probably don't trust your rules yet. And that's not a negative. It takes repetition to not pucker when the stakes are real. It's a true story. Gary, it's either rules met or rules not, right? And you weren't serious enough on sim. A lot of people. So Ziba, you couldn't take simulator seriously, so you decided to risk real money. Okay. And guys, this is why I don't give trading advice. John, these are so hard to read. When you practice the wrong rules on a simulator, you're brave and you win those trades because you don't care. There we go. Stop using the document thing, John. It's hard to read. But it's true. When you switch to real money, you get that false sense of security. Guys, you're not winning or losing in the beginning. You're learning how to follow rules. That's it. You're not worried about your P&L. You're worried about your entries. You're worried about whether or not you can follow a plan, right? And if you can't follow a plan on practice, how are you going to follow it for real? The chances are, and it's not 100% gospel truth, but the chances are you're not going to. So we're at the tail end of class, and I'm going to tell a story. There was a time, a while ago, that I road raced motorcycles. I was one of those guys in full leathers, drags their knee, 150 miles an hour, all that fun stuff. And I was out at a practice session before a 6-hour endurance race, Texas World Speedway. And I'm out there and I'm going at about 60%, guys. I'm out there and I'm having fun and I'm dragging knees and I'm smiling. Maybe I'm doing a little wheelie here and there. And it's a practice session. And I'm like, I'm just going to take it easy. And the guy that was going to be champion that year, oddly enough, his name was Bradley Champion. It was foreshadowing, I think. He blows by me. He blows by me, going full steam, tires sliding. And I was like, man, this is practice. And he's going crazy. Well, Bradley came up to me in the pits after that. And he goes, Mark, what the hell are you doing out there? And I said, man, it's practice. I'm just out there running laps, having a good time. And he goes, if you don't practice the way you want to perform when the chips are on the table, if you don't practice the way you want to perform when it's real, how are you ever going to know how to react when it's real? And it was mind-blowing to me, and it made so much sense. And I never wasted a practice session after that. And the next year, I took home a championship. And I'm telling you that's it. And Steve B says, on Simulator, he'd give himself a reward if he hit his weekly goal, like a massage, and punishment if he didn't follow a plan. No bourbon for a week. That's horrible, Steve. Nobody should have to endure that. But it helped you have a skin in the game without losing a ton. And it helped practice being focused. And Steve, I've done the same thing. If I break my rules today, I'm not going golfing. I'm going to cancel my tee time. I've done that. And perfect practice makes perfect. Amen. So guys, everybody's going to tell you a different story. Everybody has a different path. But the one thing that I've never found to be true, Trigs haven't crossed, no HVA. I like it, Gary. The one thing that I've never found to be consistently true is when people tell me the only way I'm ever going to learn is if I have a skin in the game. The only way I'm ever going to learn is if I lose real money. Guys, if you want to lose real money, if you just don't care, send me a check. I'll give you my Cash App or my Zelle, right? I'll just take it from you. And then I'll share the path with you on how you don't have to send me any more checks, right? Get so good at this on Simulator that it's not a problem when you go live. Create so much muscle memory on Simulator. Ziba, if that's what you feel you had to do, I won't tell you that it wasn't. That's not my place. Been married a long time. I'm not going to tell you how to feel. And that's okay. I'm saying in a general sense, I never blanket statement. Guys, if you learn the rules for when it's okay to trade, that's part of it. But then simulate and follow your rules. Be able to follow that plan. That's the second part of it. Keep practicing until they're easy, right? Go back, redo it. But the challenge is, and Ziba, this is respectfully, you had to be live in order for it to make sense, right? But today we're talking about termination conditions. You are. Real money's on the line. But Ziba, if you're having a challenge, and I'm not saying that you're having a challenge, so let me do this. John Novak, if you're having a challenge right now with remembering, then in order for an area to be a termination condition, that price must reach it first, well then, John Novak, are you sure you want to put your live money on the line until you're comfortable with the lessons to the point that they become second nature? That's up to you, John. I'll never tell you how to trade. But if this is such a key part of everything that you do, doesn't it make sense to be consistent with the understanding before you risk your money and continue to make that mistake live? Because I can make that mistake on Simulator 1,000 times and reinforce the lessons, right? I can take this short 1,000 times without money on the line. And hopefully what it does is it keeps me from taking that short when I go live. So Ziba, you take the path that you feel is best for you, and I'm going to be here for you every day, looking at every picture, talking about everything. And we'll just keep that path. Guys, I don't need to know if you're live or if you're on Sim. That's none of my business. Your money is absolutely none of my business. Your ability to read indicators is, so we'll keep working on that. And with that said, guys, have an amazing afternoon. Have an amazing afternoon. Strong triggers break things, right? And sometimes you have to be a little patient. Guys, I'll be back tomorrow morning at 9 a.m. We're going to do it all over. Everybody that posted, everybody that commented, Everybody that sat in the shadows and just listened, thank you for being here today. We're going to do it again tomorrow, guys, and we're going to stay on this path until we are all absolute rock stars. Have a great afternoon, and I will see